Okay. Well, I hope you enjoyed those two sessions. So starting with scenario number 1, would somebody like to tell us what they thought the opportunities are or the impact on the value chain and how disruptive this was? Oh, here we go, Des. Well done.
So the opportunities were, what will you do with this data? Who's it useful to? And what, especially from an insurance company point of view. We kind of broke it down into 2 areas. So there was one where, how could this information be used from an actuarial point of view? There was some discussion around whether there's enough information in that new data to actually change pricing. I think that's going to be a challenge. And also, how long are you going to have to collect this before it's recognized enough that actuarial people will take it in and actually change pricing? But I think the more interesting part, I think, is what can you do with this data now that you know about it from a customer point of view? So I think the biggest thing we talked about was how this could change the relationship between the insurer and the customer. So instead of being this person or this company that you talk to once a year when you do your renewals, that now that we have this data, we can work with you to come to an outcome that we both want. Which, so even if it's health insurance or life insurance, it's about working with the customer to come to a healthy outcome. So we monitor your blood pressure, now we monitor your blood sugar, and we come back to you and say, you should probably make this lifestyle choice. It would be better for everybody involved. And that's kind of where we went.
Why would you think that the actuarial community would be slow to incorporate this data within their pricing models?
Well, they have certain frameworks they have to work within, right? So they have to go and prove that any pricing change they have is correct, both from a regulatory point of view and to themselves, the risk officers in the company. So they usually have to look at quite a large data set and also going back a few years. Also, when you look at health insurance and life insurance, sometimes the events that affect the outcome happen quite a long way before the actual outcome. So people can be wearing their nice fit bands and stuff for 30 years before they have a heart attack and die. And it's something they did 30 years ago that actually happened, you know. And so unless we're looking at this data set over a long period of time, it's hard to figure out, you know. In other parts in P&C, everyone keeps talking, oh, telematics. Well, that's fine because what they did yesterday caused the accident, you know. But it's not the same when it comes to people's bodies.
Because someone was talking about PruProtect and their Vitality program, and whether they're new over here, they've been going in South Africa for decades.
Yeah, but my question there, and I don't know the actual outcome, is did they do that from an actuarial point of view? Did they go and redo all the pricing models and be the only life insurance company and health insurance company I know with different models than everyone else? Or did they make a marketing decision and say, well, you know what, it would be good if we did this? My guess is that they did a bit of positive anti-selection, which is that if we target people with this product, it's most likely going to be young people and they're going to be healthy people, and so we can afford to take, we can segment them into a healthier position. I don't think they're actually using the data from that to rechange their pricing. I think their pricing is exactly the same it was. It's just that they've done a marketing thing where they've gone out and found healthier people. But that's a guess.
And somebody else who was on that table, what opportunities did ubiquitous data create?
I think it's not just about product pricing. I think it's also about developing a new relationship with the customer, so saying that we can actually help you in other ways too, that there's more to us, that we could direct you to a doctor or a GP or the right person, and that we could keep a track of that data, so we could give you notifications of that. So it kind of changes the relationship that you have. I think it's similar to what you were saying, in the sense that it's not just you go to the insurer on a particular occasion, there's a much closer relationship there.
Okay, so let's just move on to the next scenario. On the data coin scenario, how disruptive is this? What's the impact on the value chain?
I think it's quite interesting when you look at the insurance value chain and around data. Will we be able to access consumer data? How would we access this data? How would they let us use that data? And I think that changes entirely how it would then affect the value chain. If we're allowed to access their data unanimously, we can have access to it. I think when the data comes into us as an insurer, generally people at the moment, you sign a bunch of forms, you fill things in. If we're tracking, if we're doing things like that, we'll have more live data, more real time. It'll completely change the way we can underwrite, which could add to our value proposition. Then there's the other side, is the fact that consumers will be more in charge of their data. What do they give us? How do they give it to us? And do they actively and sort of cognitively think about how they do things because we're tracking them? And will that change behaviour? That could impact on the value chain, because they could then, we would not see certain synergies that could lead to underwriting being more expensive or cheaper. And I think that I don't think anybody's got the answer, but I think it could massively change how we view our underwriting and how we derive value from that.
Does anyone else want to pick up on that?
I think it was Pete that made the point on our table, not to this question, but it fits this question perfectly, which is that if you have control of your own private data and you find out something medically wrong with you, let's say through the AliveCore app, you could then not declare that, go out and get health insurance without disclosing that information, and sort of game the system that way round, and that changes the power somewhat of who's got the information. And so it can work both ways, really, depending on who has access to that data.
So on that point then, is it a benefit to us as consumers to provide data if we then put ourselves into a game where we're actually trying to second guess other people who are gaming the market? So in other words, you know you've got something wrong with you, you game it and you get a better premium, you then die, and basically my premiums as a group start to go up. So then I've got to start to think, right, am I being totally honest with my ubiquitous data, or are other people gaming the system? So what's the benefit then? It's almost like, well, actually, there was a benefit, but you've just negated it.
Yeah, I think that's true. And I mean, if you look at Facebook as a good example of most people that share data, what they share on there tends to be an idealized version of themselves, of smiling and all the kids are happy and we're in some glamorous location somewhere. And I think probably if I'm sharing my health data, and if I've got control of that, I'm going to be sharing what I feel is an idealized view of that. Whoever's getting access to my health data, I don't want to show everything if there's negative stuff in there. If my genomic structure says I've got a predisposition to heart attack, which I might do because my dad died of the same thing and so did his dad, I'm not going to be wanting to share that.
You just said the most classic thing about data sharing. The fundamental thing is why I am sharing what I am sharing. It's not just a question of me putting something on the Facebook. Yeah, we know why we put it on the Facebook. But if I'm going to be talking to my doctor, I'm not going to show him a very smiling and laughing face when I'm actually in pain. It is who I'm sharing the data with, what I'm sharing, and why I'm sharing. Once we have answered these fundamentals, the sharing will not be a problem.
We talk quite a bit in our group around the gatekeepers of the data and who actually looks after it. If the insurer was a gatekeeper, would then for the amount of value they can derive from selling data actually outstrip how much money they could make from the insurance side of the business? Chances are that it probably would, if you look at the scale of Google, things like that. But then we talked around, would that drive down the value of data generally? If everybody's selling everybody's data, it's not worth anything. And then how would that impact value chains as well? Which we thought was quite interesting.
Okay, can we just take a question on the opportunities in this, with Datacoin? Des, do you want to?
Something just struck me there. I was thinking, you know, insurers can change. They can change their business model. Imagine if you found out somehow that you had a susceptibility to high blood pressure and a heart attack, and your thought wasn't, oh, I must keep this from my insurer, but was, oh, I should go tell my insurer this. I should go get a certain policy because they have a policy where we both are incentivized to make sure I keep track of my condition and that the outcome is a positive one. So I go and I get their susceptible to heart attack policy. I have services and data collection devices that enable me to monitor my condition. The insurer will actively come at me and tell me, you know what, your blood pressure is going up, what's wrong, you need to go out and exercise more. And so you become a partner in monitoring that disease. And part of that is the traditional insurance that, okay, you know, no matter how well you behave, there's susceptibility, something might happen, so there's a payout for your family and security for your family. But on the other side as well, we're kind of your health partner too. So maybe that's an opportunity for insurers to be slightly, I don't think it's much of a difference to the business model, but it's a different way people would think about how we behave.
Is that conceivable in 5 years, 10 years, that might happen?
I think that you might not recognize it as that, but we're currently doing something similar to that today in one of our smaller countries, so that we're providing something that is a health service to our customers, but we're not using that to evaluate risk. Basically, it's a benefit so that the customer likes us at the moment. Yeah.
I just was going to answer that. So one of the things about you might share your data or hide your data we'll probably put in barriers that will stop people from being able to do that. So there'll be actually, if we found out that you didn't disclose that, then it'll be invalid, etc. Interestingly, if you did have control of your data, you might be able to offset it in different ways. So let's say you're at a higher risk of having a stroke. Perhaps then I'll give you cheaper car insurance if you drive a safer car. So there is this idea that you could start using it if you do innovate your models significantly, that you could use it in really quite exciting ways and just really honest and more transparent ways. So actually, I know that I'm at a higher risk for here, therefore I'm not going to smoke, but also I can use what other parts of my life can I use as a make weight for that. So like I say, driving a safer car, living in a less risky area, not doing extreme sports, I don't know. But yeah, interesting times ahead.
Okay, thank you. Who approached the privacy rules?
I think the overall take of our group was that this was very much as it's described in the scenario, would be rewinding to a dark ages, the average in of data and being able to use it in more sort of productive and beneficial ways to the user would be compromised. You would more or less be back, you'd be dissolving in a way the insurance model. I'm not in insurance, so I might be slightly inaccurate on these things, but you're kind of at a point where you're having to deal with things very much on a one-to-one basis.
I think that this kind of carries across a lot of different parts of this conversation, but I think the general feel at our table was always just like, what's the benefit to people? So I think people are always cagey about not wanting people to know stuff or not having control over information about themselves. But if they're getting a benefit that to them makes sense and it's a good trade-off, then I don't think that it would necessarily be a total cut-off where all of a sudden no one shares anything. But it's kind of a constantly evolving situation where sort of legislation but also personal habits and things all kind of adapt to the changing situation depending on the benefit to you. So no one's stopped Googling things just because they're suddenly having ads targeted at them, but your behaviour kind of becomes more subtle and more aware over time.
Did you think there are any opportunities in this scenario at all?
We kind of moved forward a little bit and sort of thought, well, the opportunity is the opportunity to opt in. And the fact that you can then align clear benefits with regard to kind of premium discounts, etc., and you'd actually, in some respect, kind of discriminate against those who weren't willing to share certain data with you. At the end of the day, it's got to be a two-way street, and I know it strays a little bit away from the kind of the black and white of the scenario, but we just feel that you would create an opportunity by making, in a way, a premium of the discounts and the benefits that were to be had.
Okay, so what do you think the impact on the value chain will be this colonization phase?
Yeah, that's not a subject that our group covered, but fundamentally the way that I see it is that ultimately the individual owns their data. So even though the wearable manufacturers, the app producers might want to lock down their information because they want to or because of some regulation, fundamentally it's the individual who owns that information. So I still think there will be opportunities to do stuff with that data, even if it's just for a smaller sample size of users who decide that there is some benefit for aggregation, whether that means having to physically remove their data from the product, which typically would be in the form of like an Excel CSV file, because that product doesn't have an open API. The user still would be able to do that and port it somewhere else and put it into an aggregation platform if they wanted to.
Do you think this creates new opportunities, this kind of market structure?
Well, it hinders opportunities. So this would be, certainly from my perspective, this would be a terrible thing to happen if everyone locked down their siloed data stores. So yeah, it would, appreciating that aggregation has a huge number of benefits to users. If this did happen to that extreme, it would be a problem. But I still think that there are ways around it.
Okay. Thank you. Anyone else want to comment on?
There's a difference between aggregation of personal data and aggregation of anonymized data. Now, if there was conditions that people agreed to, that people were, there would be silos of each individual's personal data, but actually when it came to because the most benefits from having a defragmented industry are the ability to analyze large data sets and derive kind of benefit, whether it's commercial products or whether it's kind of benefit to humankind. Now, if people were to agree to have their data anonymized and sent out into a larger kind of aggregator, I'm sure that would be fine. but I think the personal data people would still like to hold on to.
Okay, can we take any other comments on this last scenario?
I just maybe on the likelihood of it. I think technically yes, it's likely at the start, as you said, everyone's in pools and they don't want to play with each other. But eventually there will be enough of a demand from companies for that data for somebody to build these aggregations and find a way to do it. So the credit risk reports kind of industry, except for personal data. But I think it comes down to insurance companies informing the customer of why they should do it and incentivizing them to do it. So I think what insurance companies are lousy at telling consumers is that we're all on the same side. So if you're sick and there's something wrong with you, there's actually no one else that I can think of who's financially incentivized to get you as healthy as quickly as possible. Doctors have an ethical thing to try and get you fixed, but like monetarily, it's a bad thing if you walk out healthy. Hospitals are the same, and everywhere else in the care industry is all the same. It's funny that we all think insurance companies are the bad people when they're actually the only ones that are really actually capitalistically on our side.
We're going to give Ruben the last word.
It was essentially the same point, just on the likelihood. I mean, the only value of a silo is if you're providing the other services yourself. And so I can't see the silos existing for very long, because eventually they're going to want to make some money out of that data. And they're not. If you're a device manufacturer, you're not an insurer. And so either you become an insurer or you have to play ball with the insurers. So.
Brilliant. Well, thanks all for that. Thanks for your comments. We'll edit that and publish that so everyone can see it. Finally, that's it. Thank you very much. Thanks for coming along.